For most of the last few months since the UK voted to leave the European Union, sterling has been under pressure. Today, however, we're seeing a significant breakout to the upside for sterling. We've had a couple of pretty major developments happen over the course of today. First, we had a high court ruling in the UK. This is equivalent to an appeals court in North America. And basically, it was in a court case discussing whether or not the UK cabinet and prime minister have the right to take the Brexit referendum vote and go trigger Article 50 of and start the Brexit process without a vote of Parliament or not. This High Court says no, that they do have to consult Parliament before moving forward with Brexit. That has eased some of the it suggested that more people might have a say in Brexit. It's also suggested the process could be dragged out for longer. That started to send the sterling up. The other thing that's happened is we've had a significant about face at the Bank of England today. The Bank of England had been hinting towards further interest rate cuts. They had been quite pessimistic about the UK economy, and we'll recall that the MPC and Governor Carney had been part of the chorus of Brexit doom before the Brexit vote, thinking that Brexit would lead to the collapse of the UK economy. That hasn't happened. The pound went down. The British economy has thrived. Even today, we had strong service PMI, strong construction PMI. We're still getting good economic data out of the UK, and that has finally caught up to the MPC and Governor Carney. So what have we seen? They've backed away from the thoughts of a rate hike. They've basically said at the same time that they're not interested in letting inflation run either, and basically they've gone to a much more solidly neutral stance on monetary policy. They've even gone so far to say that depending on what happens with the economy and the currency, they could be prepared to act in either direction. They could ease, they could also tighten. So that's a much different tone coming out of the Bank of England today, a much more neutral and relative to where they were, more hawkish. It's a hawkish shift, even though it's a neutral stance. So, because they've gone from being ultra dovish to neutral. So based on that, we're seeing the pound moving up quite significantly. Now, this High Court ruling is likely to be appealed to the UK Supreme Court. Talk is that'll be heard in early December, so we could see some choppiness around that still for quite some time. But the Bank of England is more significant in the sense that a lot of the speculation that had been driving the pound down, particularly this more recent flash crash here, was on speculation of a dovish Bank of England. If the Bank of England's not so dovish, there's room to recover. So we've rallied up here, broken out of this triangle where we had a head fake down. We've since turned up. We're starting to break out here. We've rallied from about 123 to about 125. Next resistance level is about 127, which is a 23% Fibonacci retracement of the post-Brexit downtrend. And look at this here, massively oversold on cable. We started to turn back up, and look now we're clearing 50 on the RSI, also a signal of an upturn in momentum. We're also seeing this play out in the euro pound, which is also where trading action is also quite significant, and we're seeing the pound really strengthen relative to the euro as well. So here, this was the euro strengthening and strengthening and strengthening against the pound, came down, had been stable. We didn't have this recent washout against the euro that we did against the US dollar, but look, now we're starting to roll under. We're back under 90, even starting to slide back under 89. Again, the 23% retracement. Next potential support here around 88.25. This 50-day moving average here down around 87.25. One more chart I wanted to show is the UK 100, the FTSE. This is starting to roll over. What we had seen was that massive devaluation in the pound lit a fire under UK stocks for two reasons. One, it gave them the currency devaluation that so many countries out there have been begging for, and secondly is that the UK has a lot of multinational stocks, and because of that, we when the pound went down, these stocks suddenly got a lot cheaper relative to their peers in a big hurry. So when the pound crashed, we had a big rally in the UK 100, but now we're seeing it starting to roll back and come back down the other way. We can see here it's accelerating to the downside. The The stocks actually peaked in a double top here about mid-October. They've been quietly coming under distribution, but look at this. Since taking out this 7,000 level over the last week or so, we're definitely seeing an acceleration to the downside. Took out 7,000, became resistance. Takes out 6,900, and the 50-day average becomes resistance. Now down about 6,800. Next potential support about 67.55, and then down around 66.35. Showing up here as well, this higher high in October, not confirmed by the RSI, negative divergence. We're seeing the RSI falling, break of 50, negative momentum signal, and down here we're still showing pressure accelerating to the downside. So what does that mean? We're into an environment now where the pound is starting to recover, and we're seeing a downward correction in UK stocks.